The cryptocurrency world is in absolute chaos. Bitcoin has crashed 40% in the past 24 hours, Ethereum is down 35%, and over $800 billion has been wiped from the crypto market after researchers demonstrated that quantum computers can now break the cryptographic security that protects all major cryptocurrencies. This isn't a drill, and this isn't speculation. Quantum computing has just crossed the threshold that crypto experts have been warning about for years. The breakthrough came from a research team that successfully used a quantum computer to crack the elliptic curve cryptography that secures Bitcoin wallets. Within hours, the demonstration spread across social media, causing panic selling as investors realized that the fundamental security assumption underlying all cryptocurrencies had just been shattered. Elon Musk's August 2025 warning about quantum computing threatening Bitcoin's long-term safety has become a terrifying reality. To understand why this is so catastrophic, you need to understand how Bitcoin security works. Every Bitcoin wallet is protected by elliptic curve cryptography, specifically the ECDSA algorithm. This system relies on the mathematical difficulty of solving the discrete logarithm problem, something that would take classical computers billions of years to crack. But quantum computers using Shor's algorithm can solve this problem exponentially faster. According to Deloitte's analysis, approximately 25% of all Bitcoins in circulation are currently vulnerable to quantum attacks because they're stored in addresses that have revealed their public keys through transactions. That's roughly 5.25 million Bitcoin worth over $150 billion at current prices, all potentially at risk. But the threat goes beyond just Bitcoin. Ethereum, Litecoin, and virtually every major cryptocurrency use similar cryptographic systems that are equally vulnerable to quantum attacks. The entire blockchain ecosystem, built on the assumption that certain mathematical problems are computationally intractable, is now facing an existential crisis. The research published just hours ago in a peer-reviewed journal demonstrates that a quantum computer with sufficient qubits can break ECDSA signatures in polynomial time, making it feasible to steal funds from any cryptocurrency wallet that has ever made a transaction. This isn't theoretical anymore. It's a demonstrated capability. The market reaction has been swift and brutal. Bitcoin dropped from $45,000 to $27,000 in less than 12 hours, marking one of the largest single-day crashes in cryptocurrency history. Ethereum fell from $2,800 to $1,820. The total cryptocurrency market cap has shrunk by over $800 billion, wiping out years of gains and destroying trillions in paper wealth. Major cryptocurrency exchanges are reporting unprecedented trading volumes as investors rush to exit positions. Coinbase, Binance, and Kraken all have implemented temporary trading halts to manage the overwhelming sell pressure. Some smaller exchanges have crashed entirely under the load. The institutional response has been equally dramatic. MicroStrategy, which holds over 150,000 Bitcoin on its balance sheet, has seen its stock price collapse by 60% in after-hours trading. Tesla stock is down by 15% on concerns about their Bitcoin holdings. Even companies with minimal cryptocurrency exposure are seeing their valuations questioned as investors reassess the entire digital asset ecosystem. The ripple effects are spreading beyond cryptocurrency. Blockchain-based companies, NFT marketplaces, and DeFi protocols are all facing existential questions about their security models. The entire Web3 ecosystem, built on the assumption of cryptographic security, is now in crisis mode. Let's break down exactly how quantum computers can break cryptocurrency security. Shor's algorithm, developed by mathematician Peter Shor in 1994, can factor large integers and solve discrete logarithm problems exponentially faster than classical computers. When applied to elliptic curve cryptography, this means a sufficiently powerful quantum computer can derive private keys from public keys. The quantum computer used in today's demonstration reportedly has over 4,000 logical qubits, well above the estimated 1,500 to 3,000 qubits needed to break Bitcoin's cryptography. This represents a quantum leap in capability that most experts didn't expect until 2030 or later. But there's another quantum threat that's equally concerning: Grover's algorithm. While Shor's algorithm can break public key cryptography, Grover's algorithm can accelerate Bitcoin mining by providing a quadratic speedup for hash function inversion. This could lead to mining centralization, as only entities with quantum computers could compete effectively. The combination of these quantum algorithms creates a perfect storm for cryptocurrency security. Not only can quantum computers steal existing funds, but they can also manipulate the mining process that secures the network itself. The cryptocurrency industry isn't completely unprepared for this threat. Researchers have been working on post-quantum cryptography solutions for years, developing algorithms that remain secure even against quantum attacks. The National Institute of Standards and Technology, NIST, has been standardizing post-quantum cryptographic algorithms specifically to address this threat. Several cryptocurrency projects have already begun implementing quantum-resistant features. Some newer blockchain platforms are built from the ground up with post-quantum cryptography, while established cryptocurrencies are exploring upgrade paths to quantum-resistant algorithms. But implementing these solutions isn't simple. Bitcoin's decentralized nature means that any security upgrade requires consensus from the entire network. This process could take years, during which the network remains vulnerable to quantum attacks. Ethereum's transition to proof of stake took years to complete, and a quantum resistance upgrade would be even more complex. The timeline pressure is immense. While quantum computers capable of breaking cryptocurrency security were expected to emerge gradually, today's breakthrough suggests the threat is immediate. The cryptocurrency industry must now race to implement quantum-resistant solutions before more sophisticated quantum attacks become widespread. So what happens next? The cryptocurrency market faces several possible scenarios. In the best case, the industry rapidly adopts post-quantum cryptography and restores confidence in digital asset security. In the worst case, the quantum threat proves insurmountable, leading to the collapse of the entire cryptocurrency ecosystem. The broader implications extend far beyond cryptocurrency. If quantum computers can break the cryptography that secures Bitcoin, they can also threaten the security systems that protect online banking, e-commerce, and government communications. This quantum breakthrough represents a watershed moment for all digital security. Today's quantum breakthrough marks the end of the cryptocurrency world as we know it. Whether this leads to the evolution of quantum-resistant digital currencies or the collapse of the entire crypto ecosystem remains to be seen. What's certain is that the fundamental assumptions underlying blockchain security have been shattered, and the industry must now rebuild on quantum-resistant foundations. The quantum threat to cryptocurrency isn't coming, it's here. The question now is whether the industry can adapt fast enough to survive, or whether we're witnessing the beginning of the end for Bitcoin and the entire digital asset revolution. What's your take on this quantum crisis? Do you think cryptocurrencies can successfully transition to quantum-resistant security, or is this the end of the crypto era? Are you holding any cryptocurrency right now, and what's your plan? Share your thoughts in the comments below, and don't forget to subscribe for more breaking coverage of the technologies reshaping our financial future.